You mentioned the importance of location when it comes to taxes and investing. Can you expand on asset location and in particular retirement portfolios?
So the location of assets in your investment portfolio, such as where you put your stocks or bonds in retirement accounts or taxable accounts, is an important factor. There are a few things to consider here. One, is the style of investing that you have somewhat taxing? For example, some investors or portfolio managers might have a strategy that's quite active, lots of buying and selling that could result in short-term capital gains or even long-term capital gains, as opposed to a manager or an investment strategy that's a little bit more buy and hold. In a strategy such as this, you might prefer to have that in a retirement account where all those tax implications are deferred to the future. Another example would be bonds. Taxable interest-bearing bonds produce tax rates at ordinary income tax rates, which are quite high. Some investors would prefer to put their bonds inside tax-deferred accounts for that reason. However, there is a problem with this thought process, which it does ignore liquidity and the need for income. It isn't perfect, for example, to have all of your bonds in a retirement account, even though it might be the most optimal from a tax point of view, because for most investors, the bonds are intended to be for the liquid portion of their portfolio, and investors wouldn't want to have to liquidate their retirement accounts at an inopportune time. So first, we do need to think about liquidity and the practical uses of our investments, building an appropriate asset allocation, and then we can start thinking about asset location and optimizing the tax issues around where each asset is in the portfolio in either the tax-sheltered accounts or the taxable accounts.